Well, it's a warm welcome. I'm Alec Hogg, and we are coming to you from all over the world tonight. I'll be introducing the panel in just a moment, but first, my colleague, our managing editor, Stuart Lohman, has got a few technical issues. Stu, do you want to just pick up and make sure everybody can hear us?
Excellent, thanks, Alec. Yes, can everyone, there's a little high five signal on your control panel on the right-hand side. If you can hear Alec and myself loud and clear, can you please just click that button so we can see that it's coming through? Excellent, Alec, got lots of high fives there. We also like to keep it quite conversational. There's a little questions drop-down menu on the control panel on the right-hand side. If you can please just put questions in there, Alec will pick them up and put them towards each panel member as they come through. But thanks all, have a good one.
Brilliant. Thanks, Stu. And Stuart will also be making sure that if anything were to happen and I were to fall off, he'll pick up and then do the facilitation until we can get back. We never know in South Africa, of course. We have the wonders of Telkom to deal with when it comes to bandwidth in this country. And it wouldn't be the first time that I'd been kicked out by mistake. But let me introduce you to the panelists, starting off with the man right at the top, Andrew Wellstead. Andrew, you're the Director in Tax at RM Partners. Just give us a brief synopsis of what took you into the tax world.
I hated being a commercial lawyer, and I found tax something tangible. It's problem solving. There's normally an answer, and sometimes your answer is better than somebody else. So I found it challenging and much more pleasant to work with than drafting agreements.
And your speciality?
I'm a generalist. My background is primarily banking tax transactions and corporate transactions. But in recent years, as we've merged into the global economy, doing a lot more international tax, which includes advising high net worths on structures and offshoring of funds, etc.
Because that's really what we're talking about today, moving money offshore from South Africa. Many people want to find ways of protecting themselves against uncertainty. Tax is a big issue. How do you start? Where you put them? What kind of structures, etc. We're going to be covering all of those issues. We've actually had a number of questions coming through the BizNews community already that we can pose to our panelists in a moment. But first, let's introduce the second of our panelists, Professor Philip Haupt. Philip, do you mind if I call you Philip, not Prof?
Please, Alex, please. Good evening.
Okay. What took you into academia?
That was about 38 years ago. I just enjoy academia, and I enjoyed the mental challenge. And I went into the tax department, tax section of the accounting department at UCT, and I lectured. And then I found that over the years, as I lectured, more students qualified and became clients. So over the years, I've developed quite a healthy client base of ex-students and their fathers and their uncles and their aunts and their grandparents. But I still enjoy the academic side. I retired about 6 years ago. But as Andrew said, it's interesting and it's good fun when you're not fighting with the Revenue Service.
Right. And the name of your company, Hedron Tax. What's the Hedron stand for?
Hedron is the publishing company. I started writing a tax textbook for UCT students about 38 years ago now. And before I knew it, all the universities were using the textbook, then all the technicons, then all the accounting firms, then all the law firms, and then slowly the businesses as well. So the textbook is published and distributed by Hedron, and it's quite useful. It keeps me up to date, and it keeps me in touch with all my clients and students around the country. So it's getting thicker. It started off at about 200 pages. Now, of course, it's 1,200 pages. So I feel sorry for the students and practitioners now who have to use it. It's getting quite heavy and complicated.
It's expanded almost as rapidly as the Capitec share price. So thank you, Philip. Lo Viljoen is from our sponsors of tonight's webinar, Orbvest. Lo is the CFO for Orbvest. You've got to tell us, you're our sponsors, Lo, and we've got a good partnership, good relationship here at BizNews and you guys. You've got big ambitions.
Yeah, thank you, Alec. Yeah, no, thank you for hosting it. Yeah, just from our side, where we're going and the property that we currently have, the investments, it's good. And yeah, thank you for hosting the evening with all the specialists, and how can we take it further?
And I'm sure that you're going to have some specific questions about the Orbvest investments. We've done a lot of coverage already on BizNews, and there's been a lot of excitement about investing into specialist medical properties in the United States and the high yields that have been achieved. But I guess a lot of people don't really know where to start, and that's really what we're going to assist them with this evening. So, when we talk about the United States, Todd Baldwin is actually in the United States. Todd is in Orlando, Florida. It's almost as hot as Johannesburg today, I think, Todd, and we're only in springtime. And as we can see from your shirt, you're with Baldwin Accounting, which is your own company. Just give us a little bit of an understanding what you do.
Yeah, we do specialize in international tax. A good majority of our business is investors coming in from overseas, from South Africa, from Europe, from Brazil, Australia, and we handhold them through the process of setting up the LLCs and learning the tax structures here in the U.S. So that's our biggest specialty here.
And your relationship with Orbvest?
We started with them back in 2012, and we handle very many of their investors and handle a lot of the accounting for their projects as well. So it's been a very good relationship for quite a few years.
Well, I'm sure wherever you might be in the world listening to this now, and we've got literally hundreds of people who are online with us in the webinar tonight, we're going to be going through until about 8 o'clock South African time, answering questions. That's it, really. I haven't asked any of the panelists to give us a presentation. So we're going to go straight into it and maybe start with you, Andrew. Here's a question that says, I'm interested in putting some of my money offshore. I don't necessarily want to emigrate, but just want some of my savings in an offshore investment. Can I take my money out of South Africa? How does it work? And explain a little bit about exchange control, of course, which is something we have in this country.
Sure. So exchange control is a regulator that many international jurisdictions don't have to deal with. And really what it's about is controlling the flows of funds in and outside of South Africa, particularly funds offshore. Now, there is sometimes confusion about what exchange control's role is. They're not concerned with tax so much. They're primarily concerned with the balance of payments, money coming in and going out of the country. So what that means is if you're an exchange control resident, you cannot freely move your capital abroad, and sometimes capital means more than cash. You may not move your capital freely abroad. You need certain permissions when you want to move your funds. I think the important starting point is that in South Africa, natural persons, their foreign direct investment allowance is 10 million per annum. And it's often said that exchange control is no longer a massive impact on the bulk of the population. And I think that's true. There are very few people who could take out more than 10 million per annum and still be complaining. But of course, there's a healthy number that require more funds abroad. That's the primary way of getting funds offshore. There's also a discretionary allowance of 1 million rand per annum. So I think as a rule of thumb, there's about 11 million rand per annum that people can take offshore easily. You are allowed to take additional amounts offshore, but you require specific approval from the Exchange Control Authority. And Exchange Control sits at Reserve Bank, by the way, and we deal with Exchange Control through the commercial banks who have an authorized representative that we call an authorized dealer there. The final thing I want to say is different entities have different rules that apply to them regarding what they can take offshore. I think our focus tonight is natural persons. So the rule of thumb is the 11 million per annum is easy to take offshore. There are fewer strings attached to that 11 million per annum. You can take more as a natural person if you have a specific approval in place.
Thanks, Andrew. That pretty much sums up the answer to our first question. Philip, I'm going to ask you the second one. Should I invest in my own name through my company or trust? And is that also possible? And how much am I allowed to invest annually overseas? Well, I guess the last part of the question's been answered, 11 million. Do you agree with that?
Totally right. Absolutely right.
And should I invest in my own name or a company or a trust?
The tax system is drafted in such a way that you're encouraged to invest in your own name if you buy shares in Orbvest, for example, a company overseas. Buying it in your own name is by far the simplest, and it works quite well. You can imagine that if you have to buy shares in an offshore trust or an offshore company, we've got a raft of anti-avoidance legislation that makes it quite expensive to invest through an offshore trust, certainly, and sometimes through an offshore company when you want to buy shares. So that needs some pretty careful planning. I can give you some detail on that if you need. From a South African company point of view, a normal investment Reserve Bank not likely to give approval for. They normally allow South African companies to just extend their business overseas. And a South African trust is totally not allowed to invest in overseas assets. So it would have to be an offshore company, an offshore trust. And I would say that if you do want to buy your shares through an offshore trust, the trust must have the money. If you put money into the trust to buy the shares or into a company to buy the shares, our tax system just pretends that you bought the shares. And in fact, it goes a bit further than that. If you put the money in on loan account, for example, to avoid having to pay donations tax, you might end up paying more tax than if you held the shares directly in your own name. But as I say, it depends on the source of the funds that you use to buy the shares.
Well, good stuff. Lo, as our sponsor tonight, can you give us some idea of how a South African would go about investing in your product? Let's get that on the table right up front.
Yes, thank you. Well, I think we all have been privileged to either open up a bank account or invest in, argument's sake, the JSE. And I think we're not much different. From our side is you need to go onto our website, obviously, and look at some of our projects. You need to register. We've got some nice deals currently on the website, but ultimately you need to register, do your KYC documentation. The big step is moving your funds overseas, and I think there's some good partners outside, and even your own bank account that can assist you in moving funds overseas. But it's as simple as doing your KYC, register and sign our terms and conditions, elect a project that you want to invest in, and moving your funds overseas.
KYC?
That's your normal know your client. There's obviously other in different parts of the globe, the anti-money laundering rules that we need to comply with. But it ultimately is where does your funds come from, which the receiving party needs to verify, and who's the ultimate client that's investing with them.
All right. So, Todd, there's so many questions here for you and very specialized for you. Let's start off with the first one of an LLC. What is an LLC? How does that work?
Okay, an LLC stands for Limited Liability Company. And basically it is a shell and it's the creation of a company that can have any matter of tax attributes. So you have to imagine LLC is just an organization that is very common to be used in America. And from that, the Internal Revenue Service, the IRS, has the option, or you have the choice to tell the IRS how you want that taxed. So you can have it taxed as a partnership, which is the default. So if an LLC is set up, you generally have more than one person that owns it, and foreign investors buy into that. You can also have the LLC treated as a C corporation, which is very similar to your limited companies in South Africa, where it pays its own taxes. So the LLC is a mechanism to get it to have it on the ground company here in the U.S. to house your investments.
There's a question here from EJ, who's a BizNews community member, who says, how would equities and dollars in a US account be taxed in America and then declared in South Africa for a South African citizen? For example, dividends, capital gains tax, and estate duty. Are we being taxed twice? I think probably, you don't all want to jump in at once, but if you know the answer, put your finger up, panelists. Who wants to tackle this one?
I'll go ahead and start because from a U.S. perspective, and I'm going to give it in two different scenarios, because basically as an LLC, you have three options on how you want to be taxed. And when you set it up, you choose the option. The first option is what's called a disregarded entity. Okay, in that instance, the LLC is basically invisible for tax purposes. And so when you invest as a disregarded entity, it is as if you're investing your own money and it is you. So the tax consequences are your tax consequences as a non-resident. So the second option is as a partnership where you have two people going into the LLC, and same situation. Those are looked at as pass-through entities. So whatever happens inside the LLC goes to your personal taxes, and you file a personal tax return in the U.S. for that U.S. source income. If you choose it to be a C corporation, then it has its own entity, and it is taxed, and you're not taxed unless you take dividends from it.
Sorry, Todd, please continue.
Okay, so there is a double taxation agreement. There's a tax treaty between South Africa and the U.S. so that the income is not double taxed. The income, if it's derived in the U.S. And you're taxed on it in the U.S. and it is a pass-through entity, then you pay the taxes here in the U.S. and then when you file your taxes in South Africa, you get a credit for the taxes that you pay here in the U.S. against your South African tax return. And Andrew can probably add to that.
Andrew?
Yeah, I mean, I think our primary scenario that we're discussing tonight is a South African individual who's invested funds offshore. They've taken them legally abroad, complying with exchange control, and they're either investing directly or they're investing via a vehicle. Now, if you're investing directly in your name, Todd's 100% correct. There may be local taxes that will be paid, and bear in mind that the South African investor will not be tax resident in the USA in our scenario, but they can pay tax in the USA based on our source rule or based on the USA's source rules. So that's one of the bases of taxation. You earned income from a source in the USA, and that would give them the taxing rights. We would seek to tax that amount because the investor is resident in South Africa. And the double tax agreement and the use of domestic and treaty tax credits would end up that you would probably pay the amount of tax with the highest rate, but you certainly wouldn't be double taxed. If you invested in an entity like a trust or a company, for example, as a conduit, and if that was properly structured, you may pay no tax at all, as the income may accrue to that vehicle which you've invested through.
So, Philip, anything that you'd like to add there? It just sounds to me like it's a little complicated, so you better sort things out well before you go in the first place.
Well, the one thing is, of course, we won't have double tax, especially with our double tax agreements. We have one with the United States, we have one with the Seychelles, and normally the country where the income arises gets the first bite at the tax. And if you are liable as a South African resident for the foreign tax, or if you've used a company and our look-through rules apply and the company is liable, but you tax on the income of the company, then you get South Africa gets a second bite at the tax because this is your country of residence. So normally with a double tax agreement, the country of origin of the income gets the first bite at the tax unless the DTA limits them to nothing, and then the country of residence then gets the second bite at the tax. And as Andrew says, you end up paying the higher of the two taxes, but you certainly don't pay double tax. Using a trust, it's a standard way of shielding you from foreign tax. it gets quite tricky because you have to put money into the trust to buy the shares. And the two ways to put money into the trust, you can donate it and then you pay 20% donations tax, and you're still taxed on the income of the trust and the capital gains of the trust. Or you can lend money to the trust, and if you don't charge interest on the loan, you pay donations tax on the interest you didn't charge, plus you're taxed on the income and capital gains of the trust to the extent that you didn't charge interest. And if you do charge interest, you pay tax at your marginal rate on the interest between 18 and 45%, whereas if you had the shares in your own hands in the beginning, your tax would be somewhere less, 20% or less, depending on your marginal tax rate. So as Andrew said, and as you said, Alec, there's got to be some pretty fancy tax planning if you want to limit your tax. You would only ever want to limit it if the planning and the cost of the planning makes it worthwhile, or you envisage that your current tax that you pay because of all the anti-avoidance rules is going to end up being less than the ultimate tax you would have paid had you not set the structure up. And that involves some pretty complicated planning and a bit of foresight as well. So every person's different. So you would deal with, and I find the accountants and attorneys who deal in international tax are pretty good at helping out the various investors and high net worth individuals.
Lau, just to bring you in here, when people invest in the Orbvest units or schemes, how do they? Do you help them? Do you send them off to Todd or to Andrew first, or have you got some kind of a structure that they can go into?
No, we prefer keeping it simple to a large extent. Investors that want to extent immigrate to the US or want their assets in the US, then Todd is obviously the obvious answer. From South African perspective, most investors have their own brokers, and they usually go via the broker in determining their personal circumstances, how they want to move funds overseas and in which entity. What we found out, and again, getting to the cost benefit and the tax benefit, the simplest way is going through your own personal name and investing overseas. And the tax treatment of our investments are a foreign dividend. So in your own name, it is very easy to account for the tax benefit or the tax that you need to pay in South Africa. You need to account for 20% of the foreign dividend as part of your income in South Africa, and then you get tax on the marginal interest rate. But one thing that most investors do forget is the estate tax that you pay on in instance of death. And if you don't have, obviously you need to have a will in a country that you are or have assets in. But in the instance of the US, there's a 40% CITES tax that the state will pay in the US if you have invested directly in the US.
So you got to work that one out too. In fact, you've just answered a question that came in from Sophocles Cleovoulou, what a lovely name, who said, is the foreign dividend fully taxable in South African residents' hands? You say you pay a 20% tax, so it is fully taxable.
No, not 20% tax. 20% of your dividend gets added to your taxable income. So if you earn a $100 dividend, 20% of that gets added to your taxable income, and then you pay on your marginal rate.
I just want to jump in here, if I might, Alex. There's a section 10 capital B in the Income Tax Act, and it says that if a natural person receives a dividend from a foreign company in which he holds less than 10% of the shares, 25/45 of that dividend is received tax-free, and 20/45 of the dividend is included in taxable income. And then once it's in, you apply your marginal rate, as Lau says, to that 20/45, and you end up with the tax on the dividend. Generally, though, it is 20% tax.
All right. I'm sure we can get into some kind of a rabbit hole here when we're talking about tax. That's why we have so many experts that you need to be tapping to get some insights. But here's a question from Milan Krier, who says, would CITES, is it CITES or CITES tax be levied if the CITES tax be levied if the investment is held via the Seychelles?
No, it's not applicable. Your investment is in the Seychelles, so there's no link between yourself and the US.
And what would the tax implication be? Apologies, sorry, someone want to jump in there?
Yeah, I wanted to just add on what Lo was saying, is if it's invested through Seychelles, the US property is held by a Seychelles entity, which means if the person passes away in South Africa, there's no connection to the U.S. So now, if they invest directly in the U.S. LLC, then that's U.S. CITES property, which they would be subject to the 40%. So that is the advantage of investing through Seychelles, or even investing through a South African limited company that owns U.S. property, but there's a whole other set of tax rules when it comes to that.
So let me just understand this, Todd. If you then investing through Orbvest, which is in the Seychelles, and they then invest into the United States, and you happen to have the misfortune of passing away, well, you wouldn't really care too much about it because you're not around, but your heirs would care if they had to pay 40% estate duty. So if it's done in that way, is the estate duty then not liable?
Not in the U.S. The only estate liability would be in South Africa.
Okay. What would be the tax implication when I bring my profit back into South Africa?
You know, the South African tax, just to jump in here, you must remember South African tax is payable even if you don't bring the profit back into South Africa, because we tax on a worldwide basis.
Good.
And the same rules apply to the U.S. So basically, if there is profit in an LLC, you pay the taxes here on that profit, regardless of whether you take the money or not. But in real estate, there's usually depreciation that eats up all the profit. So any money that you receive is generally a return of capital.
There's a question related to that, to the estate duty you spoke about a moment ago, from Dirk Venter, who says foreigners incur estate duty in the US at 40%, which we've discussed, when total assets exceed $60,000, which is in addition to that. But what is the detail regarding the tax treaty that South Africa has with the US with regards to estate duty? That's a good one. I know we've partly covered that, but is there any tax treaty between the two countries on estate duty?
Certainly, there certainly is. And the way it works is that we'd pay estate duty in the United States. So I think they call it the state tax there, if I'm right, Todd, on properties situated in the United States, and on shares in companies. Is it incorporated in the United States? And obviously, because the United States estate tax is higher than the South African estate duty, we wouldn't pay South African estate duty on those assets, because we'd get a credit for the United States estate duty, limited, of course, to what the South African estate duty would have been. And the estate duty agreement works in the reverse as well for United States residents investing in South Africa.
So the smart move is don't be liable for estate duty in the United States, rather find a way of bringing it back home. Johan Nell wants to know what structure is required to get protection from offshore probate and estate duty, i.e. is there a structure required? Andrew, you haven't said much for a while.
Well, I think obviously different jurisdictions will have different rules. From what we've heard in the United States, for example, it is possible, and I must tell you, something you mentioned earlier, it sounds very complicated. Offshore investing is complicated, and I always recommend that people do get advice. I'm very wary on advising on US taxes, and when you get into the niceties and the subtleties of the taxes, they're very complicated. But from what we've just discussed now, can you reduce the US inheritance tax? Yes, you can, by investing via other entities. But again, I, as a South African tax advisor, I'm very careful about giving offshore advice, and I always work with the team. If the jurisdiction involves South Africa via Seychelles into America, and it's not just because I like to run up clients' fees, but I like to make sure that we get the correct advice in each jurisdiction, and we're not guessing at it, so that we can understand what the cash flows in and out will be, and exactly what the leakage will be. And I also always advise to get an opinion from each jurisdiction so that you can rely on it, because I meet so many clients who come to me and tell me stories about their structures and what the returns are and what the leakage is, and they don't really understand it. So when I ask for something in writing, it's not there. And I think in this day and age, and particularly in cross-border, you need to make sure that you've got a thread that runs through each jurisdiction, and you've got the appropriate advice. A Todd in the US, Seychelles probably easier, it's a low tax jurisdiction, and then the correctly qualified person in South Africa who's limiting their advice to South African advice.
But Lau, you try and keep all of this pretty simple.
Yeah, no, it is complicated. Hence, probably one of our biggest expenses are to tax advisors. But ultimately, we've got our tax opinions. But investing in a listed entity, and I think that makes it to an extent less complicated. South African investor, buying a share in the Seychelles, and that company then investing in the US. There is a lot of moving parts, but it's ultimately a pure property investment in the US. We pay our taxes where it's due, so in the US, and that's where Todd comes in. We make sure that we pay all the taxes there. The distribution that is back to the Seychelles, it forms these different forms that it takes on. But ultimately, you as an investor receives a foreign dividend, which you just need to declare. So we've taken all the hard work where the individual needed to look after his own personal tax in the US, setting up cost structures, the LLC cost and everything, opening up bank accounts. We've taken all that hard work away, and effectively he gets a dividend on a quarterly basis with not a lot of work to do.
Leith Antisevich, I hope I've pronounced the surname correctly, asks, touching on an earlier point, any thoughts on potential changes or restrictions to exchange control in South Africa in reducing the annual investment allowance? You spoke earlier about it being 11 million rand, both Andrew and Philip. Any thoughts about, certainly with the way that money is leaving South Africa at the moment in bucket loads, that the Reserve Bank might step in and stop it?
I think the trend has been... sorry, Philip.
I just said I have no idea. I wouldn't like to venture a guess.
Well, Andrew, you can.
I'll give you a slight explanation, but no guess really. But the trend has been to relax exchange controls in recent times. And at every budget, and sometimes at the medium-term budget, I get calls saying, do we think exchange control is going to disappear? As I said to you, for the bulk of the population, certainly private individuals, it really is more of a reporting function than anything else. Do we expect any changes? It's very difficult to anticipate. I am hearing more and more, and I can personally attest to the fact that there does seem to be an uptick in the amount of capital being exported. I think the bulk of it's being exported legally because you can do it. Whether or not it's causing concerns to the Reserve Bank, in my experience, is based on balance of payments data and other things that they look at. So, I would be surprised in the modern world if there was a tightening, but I think people are hopeful every year that it would be relaxed more, and certainly on some of the corporate transactions, which is an area I'm involved in, I would like further relaxations. But it is, if you do your admin correctly and you set up your structure and you get the initial approvals and you're up to date with your reporting, exchange control is more of a reporting burden than anything else.
It's quite interesting. The little contribution I can make to this part of the conversation was last month. Earlier this month, in Cape Town at the World Economic Forum Africa Summit, I met with Lesetja Kganyago, the Reserve Bank governor, and I put exactly this point to him, saying that if so much money is leaving the country, surely at some point in time you guys are going to stop and contract the exchange controls. And his response was, no, exactly what you were saying earlier, Andrew. In a modern world, that's not the way that you want to act. But more than that, he said, we want people to go and take their money offshore, and if they're successful, that's good, because then we will earn back the wealth, share in the wealth that they take. But we think they're going to find that it's a better place to invest onshore, come back to South Africa. So there's some interesting ideas that are going around on that side, but primarily for the moment anyway, it doesn't look like there's going to be any dramatic changes in the exchange control regulations, but I guess, as you say, one never knows. Hilditch Beer, and we've got a lot of questions to go through, so I'm going to try and, if we can, just keep the answers as short as possible, because we truly do have many. He asks, do we need a US will as well as a South African one? Todd?
It is probably recommended to have that. I mean, anything that is not, will is, I mean, I think the South African will would override. But I guess from that perspective, that's a question more for an attorney, a U.S. attorney, which unfortunately we don't have one here. But, you know, I think in my opinion, the South African will would prevail if there is one there.
How do we invest directly into the US, for instance, Vanguard funds from South Africa without incurring situs on death? Wow, that's complicated. And that comes from Shamlin Naidu. Any thoughts?
As we talked about, if you're going to invest here, you're going to have to do it through a company. The other option to avoid estate taxes is to buy life insurance here. We've had some clients that have done that, so there's a cost involved. And then my last advice is, you know, you can't always predict when you're going to die, but if you're getting terminal and you know it looks like you are, then you liquidate your U.S. assets before you pass away. You know, generally you have control over it.
That's very sensible. Another question from Milan Kruger, who says, will it be dividend with withholding tax, income, or capital gains tax? I didn't understand that question. Sorry, Milan. Let's go on to the next one. Renee de Villiers, can you invest through an international retirement plan set up in Guernsey, Section 40EE? Hello?
I'd give some advice there, Alec. Get a few tax opinions on those retirement plans. Don't just get one.
Yeah, that's a complex thing. Yeah, that's certainly complex.
And there are contradictory tax opinions, and you know, some advisors are more conservative than others. And with those plans, if you're an investor, don't hear what you want to hear. Hear what the advisor's actually telling you. And as I say, you know, some plans are too good to be true, and which obviously means they're not. So a lot of caution needs to be exercised with those retirement plans.
If something's too good to be true, it usually is. Can you invest through, say, Old Mutual International Wrapper Fund?
Sure.
So that's very popular at the moment. There are a couple of the life companies offering those, and there are variations on them, of course, to make them more competitive. But some of the common ones, they will use your foreign direct investment allowance, the 10 and maybe the other million, so the 11 million we spoke about, to externalize your funds in your name. They will then you'll effectively take out a long-term insurance policy or a life policy. They call it wrapping it because your investments will then be made in the policy. And if that can be paid offshore, it can be very tax efficient. So I think, in just touching on what Philip said earlier, some of the popular structures that we're seeing are still foreign trusts, foreign life policies, and foreign pension funds. And the similarity between all of them is that you have access to your assets at some point, or you continue to beneficially own them, but you don't own them directly. But again, given the additional complexity in these things, and given the variation between different service providers, I think, again, I'm going to come back to it, you're well advised to make sure that you have taken the advice. And the other thing that must be borne in mind is an element of proportionality. If we're talking about 2, 3, 4 million, don't get too fancy, keep it simple. The fancier structures make sense, particularly because of fees that are extracted generally. They make sense when you're talking bigger money.
How much? How big? When do you start really having to talk to advisors?
As a rule of thumb, that's probably a bit arbitrary. I think around the $1.5 million euro mark, you start appreciating the value that your fees are getting you. I think people under that, particularly if the investments don't perform particularly well, see $2, $3, $4, $5, up to $10,000 disappearing annually, and they become upset when there's not much growth because it's a one-way ticket at that point.
Mm-hmm. There's another one here from Hilditch Beer who says, if the money we get from our investments is called dividends, do we only pay the dividend tax rate in South Africa or on our personal income tax scale? Philip?
You pay on your personal income tax scale, personal income tax on 20/45 of the dividend. So the tax on the foreign dividend is not a separate tax. It's not like South African dividends tax. It's normal income tax, but only on a percentage of the foreign dividend. The idea is to try to match the tax you pay on a foreign dividend with the tax you pay on a South African dividend to level the playing fields. So the mechanism they've done it is through the normal income tax system as far as foreign dividends are concerned. If you own 10% or more of the shares in the foreign company, the rules all change. But you know, as this is a listed company, as Lowe said, I don't think anybody owns 10% or more of the equity shares.
Willem Swart wants to know if we use the quarterly payouts to buy more shares in property directly on the platform, do you pay tax on that or only when you bring the money back home into your original source?
No, we're not that lucky not to pay tax on it. You need to declare it on your yearly tax form, so unluckily not.
Gavin Uren wants to know, is this webinar being recorded? Gavin, I can answer that. Yes, it is. Stuart is busy recording it as we speak. We'll have it up on BizNews pretty soon. Lynn Caton wants to know, is investing via Nedbank Private Wealth in Isle of Man considered a direct investment in my name?
It should be. Why wouldn't it be? It depends how they structure it and what your agreement with the organization is.
Here's one for you, Todd.
She's talking about
stock funds? I don't know. That's what she asked, and I think you've answered it. Michael Honeysett wanted to ask you, Todd, what are the death duties in the United States as a South African citizen?
As we talked about, it's 40% of the assets over $60,000.
So you're a South African citizen, you're living in the United States, you die there, you pay the 40%.
Oh, okay. So no, if they live here, if they move to the U.S., then it falls under our U.S. rules at some point. And again, this goes to legal advice, but generally if you move here, then you become a U.S. resident for tax purposes and estate purposes once you've pretty much moved your family here. And then the estate tax exemption is $11 million. And so you up to the first 11 million is tax free.
I think you've just had a whole bunch of would-be emigres thinking that they might be getting on that next plane, because at 40% not so good. 11 million tax-free for a South African. Phew, well, that's plenty. There's a question here from Francis O'Neill, who says, as a South African resident, will there be estate duty payable in the Seychelles on investments made in Orbvest medical deals? Hello?
No, there's no estate duty payable there.
Nice and simple. Michael Glatar says, what is the panel's view on international pension plans and the tax implications, e.g. Isle of Man or Guernsey? I know you've touched on this, Philip. Do you want to elaborate?
All right. Let's assume that the pension plan has similar rules to a South African pension plan, and that you have no control over the investments in the plan. And in fact, you're not interested in the investments in the plan, and the investments in the plan are not ring-fenced to you as a pensioner. Let's say it's like a genuine South African pension plan with similar rules. Then, of course, you're only taxed as and when you draw your pension. If your pension relates to services you actually rendered outside South Africa, then the pension year is tax-free. So somebody who worked overseas for 20, 30 years, when they retire, they're entitled to a pension from a pension fund. They come to South Africa. We won't tax them on their foreign pension. But a normal investment, like similar to our retirement annuities, where you go and you buy or make a contribution to a fund in return for an annuity, that we would tax on just as normal annuity income. If the fund is such that they purport to hold the investments on your behalf and that you have a little bit of control over the investments in the fund, we've got some binding private rulings issued by the Revenue Service where they look right through the plan and tax you as if you own the investments. But again, as Andrew says, you've got different plans, you've got different rules. Each one's a bit different. So there's no one answer fits all.
Les Davis asks, why are we only talking about tax? I think it's because all the questions are about tax, and we've got a whole bunch of panelists who are experts in tax. But let's just see. Here's one. As a South African resident, this one comes from Francis O'Neill. Is having one will drafted in South Africa sufficient to cover all your worldwide assets in the event of death?
I frequently get this question. To some extent, it depends on the types of assets you've got overseas and in the jurisdiction. And I'm going to continue to be a coward. What I like to do is, I like as few testamentary documents as possible, i.e. wills. So if you can have one will and be comfortable that it will be enforced in the foreign jurisdiction and it will not be problematic for your executor to deal with the assets in the foreign jurisdiction, then you only need one. The key question is, what are the rules there? So again, it's a case for most people who've got a few assets. It's normally, as a rule of thumb, okay to have one will. If you've got an increasingly complex estate or substantial assets overseas, I think it's a good idea to check with the foreign expert, a lawyer or an accountant, as to what the rules are. Will they recognize the South African will? What are the processes? And is there anything that makes it advisable to have more than one will? But, people's wills, in my experience, are generally in disarray, if I can be a bit cynical about it. So managing more than one will is problematic as it is. So, with a will, if you can get someone who's paying attention to their one will at any point in time, that you're doing quite well.
Gareth Evans asks, he says, you're only talking about investing in the USA. Any opinion on holding investments in the UK? Ooh, Gareth. Lo, why do you guys only invest in the USA? Why haven't you gone into Brexit land?
Firstly, we focus on medical office buildings in the USA, so that's our focus area. We've been doing it now since 2014. That's our speciality. We did venture into the UK, into Australia, but ultimately, if you focus on a specific niche, and we carved it out for us, that niche market, the investments that we're now making, the returns that we're getting, going to something new just to venture into something new, I don't think it's worthwhile where we are now. From a growth perspective, we want to give investors, we can't say guaranteed return, but to try and make as secure as possible the returns that we pay out. We all know that a doctor doesn't easily move from his premises. We've got long-term leases. So always in favor for medical office buildings. It's one of the niche markets in America. And yes, there might be markets in the UK, but America is so big, and the states in America are so big. So when we just look at a state, there's different states which got different investment and tenant criteria. So it becomes a niche within a niche in America, and venturing to a new country, I think there's other companies that will do it gladly, but we focus on America.
There's a question here from Julian Moscow, which I quite like. I'm sure it's for you, Andrew. He says, is there any special approval you need for the 10 million rand that you take offshore? Mention was made of R1 million discretionary, which is what the local investment companies are currently utilizing with just a local declaration.
It's actually a very good question and something I should have touched on. You need to get a tax clearance certificate for the 10 million rand. Now, in my mind, a tax clearance certificate should be checking whether your taxes are up to date or not. In my experience, SARS frequently overstretch what I would say is the reasonable bounds of what they can inquire. That said, I think it shouldn't be problematic. You need to get a tax clearance certificate. It's a specific tax clearance certificate. And if you are struggling with SARS, I don't think you should feel uncomfortable, particularly where your tax affairs are up to date, to push back a little bit. Once you've got the tax clearance certificate and the funds are in your bank account, you can take it to the authorized dealer, which I mentioned is the sort of face of exchange control that we all deal with at the commercial banks, and they will pay it overseas. So the key document is a tax clearance certificate for the 10 million.
And I remember getting mine. I sat at the SARS at Randburg for probably a few hours. It's not an easy process, but it certainly is worthwhile there. Andrew Clayton wants to ask you a question, Philip. He says, OTAP offer a S40EE pension trust solution via Guernsey. Philip hints at issues with solutions wrapped in S40EE. Is this one that he's concerned with? Within this, the IFA advises on the funds invested in the agreement of the client. Do you want to have a go at it, Philip?
I don't know that investment, so I won't comment. I agree with Andrew as well that before investing, you need to do your due diligence, get written opinions from experts in the various jurisdictions. And if a South African had to make a comment on that particular investment, he would need all the paperwork, all the contracts, all the financial statements, so that he could look at it and make a call. As I say, I don't know that particular investment, so I won't comment.
Todd, here's one for you. What happens if you buy US shares through, for example, Saxo Bank, which is quite popular here in South Africa, and which is a Danish bank? Is it still liable for 40% estate duty?
When you're saying that it's invested through the bank, it all depends on what you're investing in. I mean, if they're taking the funds and transferring them into a U.S. investment into real estate, then they're now invested in the U.S. real estate. So I think it's all semantics as far as where that money's coming from. Once the money transfers over to the U.S., then it's a U.S. Citus asset, and it's not really through another vehicle.
Mm-hmm. There's a question here from Sophocles again. He says, does the Orbvest investment qualify for the Golden Passport programs offered by the USA? Lo?
No, no. As again, you're investing via the Seychelles and not a direct investment in the US. I know they've now increased the minimum from 500,000, if I'm correct, to $850,000. But yeah, we don't offer green cards.
And then Francis asks another question, Francis O'Neill. I believe as a South African resident, in the event of death, will forced heirship be applicable to Orbvest medical deals in the Seychelles?
We recommend for our investors to have a will in the Seychelles, otherwise you'll be interstate. But yeah, so the assets will be declared back to you in South Africa, or back to your heirs in South Africa.
Philip, OTAP is a firm overseas trust and pensions company. Okay, I didn't know that. Thank you very much, Andrew, for explaining that one. Well, we're getting to the end of our program, gents. It's really flown by, but I'm trying to find so many questions here. Referring Professor Harp's last advice, what would be the impact if a South African citizen worked outside of South Africa as an expat for, say, 20 years? Is there part exemption from South African tax when the person returns to South Africa?
Yes. Now, obviously, when you work outside South Africa for a long time, you need to determine whether the person during that period was temporarily absent from South Africa, but obviously 20 years it wouldn't be temporary, you'd be non-tax resident. And we normally advise people, and I'm sure Andrew's involved in this as well, is that when they return to South Africa, prior to re-establishing residence here, if they have enough money, and I would think a good few $1 million or euros, a good few million, is to actually set up an offshore foundation or trust structure, because our anti-avoidance rules only apply to South African residents investing money offshore in structures. They do not apply if a non-resident puts his money into a structure before becoming South African resident. So generally, though, before re-establishing residence in South Africa, you do need to move your funds into a structure, because if you come here and you have offshore investments, you do restate the base cost of all your capital assets, but you are taxed on the income that those assets generate if they're still in your own name, even though you might have acquired them before becoming resident. And then there are quite complicated estate duty rules on which of those assets fall into your estate for South African estate duty and which fall out of your estate. So the best thing, though, is to restructure before settling back in South Africa.
And a final question.
Question, Alex.
I think it does. I think you've given it lots of airtime on that one. And the final question for Todd is: the USA might be the world's leading destination for investment, but it is highly regulated. Todd, can you help us understand how a foreigner would invest in America if he were to invest in property, for example?
Yeah, you can invest in property if you're doing it on your own. You can invest it in your personal name. The regulations are very clear. You just have to follow the rules. And as far as filing the tax returns, you need to rely on a good CPA in the U.S. to make sure that you follow all the rules. As long as you follow the rules, the regulations aren't a problem.
That's a big thing about the United States, that sometimes when one comes from a third world country, you don't quite get it. We used to have a gangster here called Stander. And the Stander gang stole a lot of money in South Africa. He was actually a captain in the police force, and they managed to evade the law. And he went to the United States and was stopped by a normal police for a traffic offense. Okay, got out of the car and tried to argue with a policeman with a gun in his hand, and that was the end of Captain Stander. So in the United States, they take law enforcement fairly seriously, not just in the streets, but in finance as well.
Yes, yeah, and again, if you follow the rules, we are regulated, but the rules are clear. There's no necessarily gray area. I mean, people say there's some gray area, but at the most part, the rules are clear, and the laws are usually made fair. You know, you understand them. The government gets their share. The taxpayer gets their share, and there's a reason behind them. So it's regulated, but it's a safe environment.
Todd Baldwin talking to us tonight from Orlando in Florida. Thank you for being for being with us on South African evening time. Also to Lo Viljoen, who is the Chief Financial Officer of Orbvest. I think we got a little bit more insights into how the Orbvest story works. We've covered it a lot on BizNews, and all you need to do really is just well, I suppose you can go on to BizNews, or you can even go on to Google. Just Google Orbvest BizNews, and you'll get everything you possibly need. Philip Haupt is a academic professor, tax expert from the University of Cape Town, our veteran here tonight. Thank you, Philip, for all the insights you've given us. And Andrew Wellstead, a tax practitioner, I guess we could call you, Andrew. Thank you for also all of the practical advice you've given us. It's been an interesting hour, but we have come to the end of it now. And we thank you, members of the BizNews community, and everybody else who came along tonight for those amazing questions. There's a whole bunch of them that I'm afraid I haven't been able to get around to all of them, but I'm sure that we will find answers and be able to email them individually to those who did pose those questions. Well, that's it for tonight. It's just gone 8 o'clock. I look forward to the next time. Stu, you happy to take us out?
Excellent. Thanks, Alec. We've shut him down now. Thanks, everyone.
Thank you.
Thank you.